Hello and welcome to the Business Today show. This is the market closing show and just a few minutes before the markets shut shop for the day. First up, let's take a look at what's hot in the corporate and the financial space. With less than 72 hours to go before the union budget, the Economic Survey 2026 has pegged FY27 growth at 6.8 to 7.2%, says US trade deal talks may conclude this year, flags global risks and rupee pressures, but maintains a positive outlook on India's economy. Ahead of the budget 2026, Prime Minister Modi has pitched reform, perform, transform, saying India racing on the reform express, citing India-EU deal. He's also said Indian goods to gain global markets driven by quality, trust with next 25 years crucial for India. Markets stage a comeback after a weak start ahead of the weekend's union budget. Sensex up 200 points near 82,500. The Nifty also up by 70 points at 25,400. Metals are shining bright while FMCG stocks are facing selling pressure. Rupee has hit a record low, breaching the 92 mark against the US dollar. Gold and silver continue to have a record rally. You can see MCX gold now jumping 14,000 rupees to now hit 1.8 lakh rupees per 10 grams. Silver is also up by 23,000 rupees, now trading at 4.09 lakh rupees per kilo, mirroring the global precious metals rally driven by safe haven demand and a weak dollar. India to slash import duties on high-end European cars to 30 to 35%, up from up about 110%. Reuters has also reported from sources that luxury car makers like BMW, Mercedes can expand. Electric vehicles over 20,000 euros also see cuts in 5 years. There's less than 68 hours to go till the 2026 budget speech by Finance Minister Nirmala Sitharaman in Lok Sabha is done. All by accounts, also the speech could trigger yet another round of big reforms to boost the economy. In the clearest signal yet, Prime Minister Narendra Modi today has announced that the government's reform express will continue to chug on at a fast pace but with a human-centric approach.
देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं, बहुत तेजी से चल पड़े हैं। हमारे हर निर्णय में राष्ट्र की प्रगति ये हमारा लक्ष्य है, लेकिन हमारे सारे निर्णय ह्यूमन सेंट्रिक है। हमारी भूमिका, हमारी योजनाएं ह्यूमन सेंट्रिक है। हम टेक्नोलॉजी के साथ स्पर्धा भी करेंगे, हम टेक्नोलॉजी को आत्मसात भी करेंगे, हम टेक्नोलॉजी के सामर्थ्य को स्वीकार भी करेंगे, लेकिन उसके साथ साथ हम मानव केंद्रीय व्यवस्था को जरा भी कम नहीं आंकेंगे।
Well, India is expected to remain the world's fastest growing major economy this year as well as the next year. The economic survey for the current financial year, tabled earlier in the Lok Sabha by Finance Minister, today estimates the GDP growth rate at 7.4% for this year, that's FY26, and between 6.8 to 7.2% next year, that will be fiscal year 2027. The survey, however, lists out several action areas where the government must act to ensure the growth trajectory stays strong. This also includes measures to improve India as a global investment destination and identifying why investors are reluctant to commit to India. The survey also suggests a renewed divestment focus with sale of stake in some of the PSUs to supplement government revenue. On the capital markets front, the survey recommends incentives for equity investors to trade more and build secondary market liquidity. The survey also reflects on how cash-rich pension and insurance funds remain conservative. Investors pushing for more active participation by them in the markets. There is also a suggestion for the next phase of the GST reforms, with changes to the e-way bill system. The survey also calls for improved regulations to manage risks posed by artificial intelligence. And for more on this, we are now joined by my colleague Chetan Bhutani. Chetan, what do the fine prints really read for the economic survey? What kind of signs and signals does it point out to the upcoming union budget? What should an average investor and a viewer really understand from this year's economic survey?
It's actually 2 to 3 key takeaways. In fact, the economic survey clearly mentioning the growth of India, real GDP growth hovering between 6.8 to 7.2%. Also, the real GDP growth will be identifying sectors which are actually reluctant to come to India, thereby increasing participation of the private sector. Remember, Finance Minister and Prime Minister both have been talking about how private investors need to come up, private industry needs to come out to push for the capex reforms that the government has announced. However, the economic survey also mentions that even though the global economies remain fragile, the geopolitical conditions remain very fragile, considering the dollar and the rupee volatility as well. India growth story continues as it is. The economic survey also mentions, however, that India's economy and of course is an improved, attractive destination for investments will be, of course, being on the rounds. But however, the economic survey also points out one very clear point that with the divestment focus and stake sales of PSUs, the government really wants to move away from being in business rather than handing out to other investors, so that the capex story really grows. So that's what we're going to also see in the budget. So these are the 2, 3, 4 highlights that the economic survey talks about. But yes, the big story and the big takeaway is about 6.8 to 7.2% growth is what the country would be looking at for the GDP.
Right. Thanks a lot, Chetan, for all those details. Meanwhile, the Chief Economic Advisor, V. Anantanageshwaran, has also briefed media on the economic survey of 2026, calling India on the oasis of stability in a turbulent world. He's also highlighted strong growth with low inflation, manufacturing and exports driving the momentum currently. He's also spoken on FDI as well as the rupee depreciation. That has been a key concern for a lot of investors. Let's listen in to what he had to say.
If you look at the currency, therefore, as a country that depends on imported capital to meet a current account deficit, even though the deficit itself is on the lower side, if capital flows become weaker, naturally the currency reflects that. And that is what we have seen in the last 1 year, with the rupee weakening against the dollar by about 6 to 7%. This is in spite of the stellar economic fundamentals we have. So it has got nothing to do with the macro picture.
Just after the Finance Minister Nirmala Sitharaman tabled the economic survey in Lok Sabha today, Business Today's group editor Sitharaman also spoke to a panel of experts, including Sajid Chenoy, the MD and the Chief India Economist at JP Morgan, Sonal Verma, MD and Chief Economist of Asia as well as India for Nomura, and Anubhuti Sahai, the Head of South Asia Economic Research for India at Stanchart, Tanvi Gupta Jain, Chief India Economist UBS Securities, on what they expect from the upcoming union budget. Let's listen in to an excerpt from that conversation.
Big reform announcement that you personally are looking forward to from the Finance Minister. Sajid, that question to you at first.
No, what I've been looking forward to, what I want to first, congratulate the government is that they've not succumbed to export pessimism the last 6 months. It would have been easy to say after the lack of a deal with the US, let's turn inward. We haven't. In fact, that's motivated us to go on a spree of signing free trade agreements, right? And we
8 at last count.
Now, what is the reform that's needed to complement that? In my mind, the old adage in economics, an import tariff is the same as an export tax, has never been truer than in a world of global value chains. So what I'd like to see in the budget is a start of a dramatic simplification and rationalization of the customs duty scheme. So we want to lower tariffs, we want to simplify the whole process, we want to correct inverted duty curves, and thereby make it much easier to import to help to re-export. So I think given the focus on FTAs and export-led growth, we need to clean up the customs duties and import regime so as to seamlessly integrate better into global value chains. So I'd be looking for a whole big package on customs duties, lower import tariffs, lower non-tariff barriers, including QCAOs. We focused on income taxes in the past. We've done corporate taxes. We now need to do import duties.
Absolutely. Sonal, that very question, the same question to you.
I would be watching actually the signals on fiscal, and I think a clear and very clear signal on fiscal prudence is needed because bond markets are on tenterhooks because of supply concerns. So I think the message that even as we are moving to a debt targeting regime on the center side, the fiscal deficit will be lowered in the coming years, and that it's not just going to be a center-driven consolidation, but state on the debt side will also consolidate. I think if we do send those clear signals, then at least the fiscal-related concerns that are a big overhang on the bond markets, some of that can be taken off the table.
Okay. Anubhuti, what would you be looking forward to?
I won't look for any one particular reform, whether it is about using, import duty reduction to encourage investments rather than use it for protection or risk sharing, reducing cost of doing business in India. I mean, an infra project run by central government has a cost overrun of 22%. So we need a whole host of reforms, Siddharth. So I won't focus on one. My only ask would be, even if the government decides to pick one area, the speed of delivery is the ask today.
Absolutely.
We are living in a world which is evolving much faster than what we are realizing. And unless we deliver on the speed of whichever reform we are, putting as a priority, just asking for one reform change really wouldn't help. So speed is the key thing here.
Absolutely. And as Chandrababu Naidu, Chief Minister of Andhra Pradesh, said at a recent event with a group at Davos, it's no longer about ease of doing business, it's about speed of doing business. Closing comments, Tanvi, to you, 30 seconds.
So quickly on the reform, one policy narrative I definitely want Finance Minister to touch upon is India relative representation in the global AI landscape. So articulate a very strong AI narrative, step up funding for digital infrastructure, focus on data centers, semis, electronics, R&D. Our R&D spend has not moved a needle in the last 1 decade. So definitely a narrative on new age technology sectors, I think will be very good from an investor point of view.
Viewers, if I were to add to our expert panel here, I think all measures, possible measures that can lead to a return of capital flows in substantial quantities would be what I would just add to the expert voices who have decoded both the economic survey and given us a sense of what the priorities of the union budget will be.
All right, viewers, let's quickly look at how the markets are shaping up. 25,418 right now. So we're up by about, 75 odd points. So 0.3% up. We have actually moved to the high point of the day after having started the day on a low note. A lot of positive sentiments improving right ahead of the union budget. Let's actually try and understand what's fueling this move and whether we can expect a bounce further up from here as well. With our guest joining now in, Mr. Abhishek Basu Malik is now with us from Sri Rama PMS. Warm welcome to you, Mr. Basu Malik. Good to have you with us. First up, your sense on the current market setup. Do you think it's the economic survey and the signals from there that have lifted some sentiments there? Is this finally a pre-budget rally that is setting sail? And how would you look at the markets from here on?
So good afternoon to you and all the viewers. See, I think I wouldn't call this a pre-budget rally as such because the markets, it's just sort of off the lows of the day. And, at least this week we've seen a bit of a rally after pretty, bad couple of weeks that we had seen. So I wouldn't say it's a rally as such, but I think, yes, people are waiting for the budget and that's the main event. So expecting the markets to be, sort of shallow and consolidating today and tomorrow.
Okay. If I have to ask you, Mr. Basu Malik, which are the sectors that you're comfortable in holding on to or probably doubling down right ahead of the budget, looking at the key signals from the eco survey, what would those sectors be?
Actually, I've not seen the economic survey, document. I don't think it's been published as yet. But overall, I think, the expenditure front, see, the big announcements that used to happen in the budget used to be related to the taxations. Right now, a large part of it is actually, out of that system in the sense that, GST is separate it has to go through its own board. And we've seen changes in the direct taxation in the last couple of budgets, so I'm not expecting anything on the taxation front. Maybe some small tinkering for the gift city and things like that. But what is going to be important from the budget perspective is where the government is going to allocate, which are the ministries. So coming back to your question, I think you look at shipping, you look at mining, steel, defense, railways, ports. These are the areas. So basic infrastructure is, I think, where the government is focusing on. That has been a consistent narrative that we've seen over the last few months, and I expect that to continue.
Right. Let's also shift focus, viewers, as far as Prime Minister Narendra Modi is concerned. He has reiterated his message on how the industry should shift its focus to product quality, citing the EU-India Free Trade Agreement, the mother of all deals. He's also said that agreement opens massive opportunities for Indian industry. He's also emphasized that a focus on quality will win not just markets but the lasting trust. Let's listen in to an excerpt.
भारत यूरोपियन यूनियन के बीच मदर ऑफ ऑल डील्स जिसको कहते हैं, वैसा समझौता हुआ है तब मेरे देश के उद्योगकार, मेरे देश के मैन्युफैक्चरर्स अब तो बहुत बड़ा बाजार खुल गया, अब बहुत सस्ते में हमारा माल पहुंच जाएगा, इतने भाव से वो बैठे न रहे। ये एक अवसर है और इस अवसर का सबसे पहला मंत्र ये होता है कि हम क्वालिटी पर बल दें। हम अब जब बाजार खुल गया है तो उत्तम से उत्तम क्वालिटी लेकर के बाजार में जाएं, और अगर उत्तम से उत्तम क्वालिटी लेकर के जाते हैं तो हम यूरोपियन यूनियन के 27 देशों के खरीदारों के पैसे ही कमाते इतना नहीं, क्वालिटी के कारण से हम उनका दिल जीत लेते हैं।
All right, let me also go back yet again to Mr. Basu Malik and try and find out as to how should investors be really now looking at the markets and amidst the government's efforts to constantly look at newer opportunities to get over the global shocks that we've been facing over the last 1.5 years odd. Mr. Basu Malik, how are you looking at the deals that we are signing, the mother of all deals with the European Union that we've signed, and a lot of sectors that are also pulling up in sentiments on the back of improved trade deals as well as the opportunities that exporters may have? Will that offset in any fashion the impact of tariffs that have been imposed by the US on Indian exporters?
Not really. I think US is a far, far bigger market that we export to. Europe is much smaller in size. First, that's the first point. Secondly, I think we are probably jumping the gun on the Europe trade deal. It's not yet signed. The actual signing will take place a few months later, maybe even 6 months later. So none of this is going to happen, quickly. Last time the Europe signed a deal with South American countries, it went to the European courts, and that's been in limbo. So we have to wait and see how this plays out. Hopefully, nothing of that sort is going to happen with this deal, and it's going to go through. But even if it goes through, it's going to take time. It's not something that will happen in the next 2-3 months. It's going to take 6 months to a year for the Indian companies to start seeing benefits. Having said that, yes, there is definitely opportunities in pockets. If you look at the entire European Union increasing their defense budgets, obviously there is going to be scope there for our defense companies, our manufacturing companies. So definitely in pockets there will be definite scope for exports.
Okay. So, for an average investor, from the last 1.5 years, it was the narrative was go big on the domestic story, go big on the domestic sectors, avoid the external sectors, anything that has to do with the dollar or anything that can, get an impact or get volatile because of the external shocks. How is that situation going to turn in 2026?
I don't expect it to turn. I think the story will continue to remain the same. The big spender is continuing to be the government. So government-led sectors, or where we see PLIs happening, those are the place where capex is happening, and I don't see a immediate change in that.
Okay. Last 2 minutes to go. Let me quickly take any key understanding from you as to key sectors or stocks that you are now turning also bullish on because of the earnings that have actually come in. Have they pointed out to turning a corner?
So, interesting earnings season so far. I think some of the cement companies, they've come out with good results. In pockets, chemicals, agrochemicals have come out with very good results. So, you have to be very, very stock specific. Banks have been coming out with fairly good results. Banks, MFIs. So that's another space which looks quite decent. Steel, in fact, the entire steel, mining, etc., uh, they have come out with reasonably good results. So again, the same set of sectors that I'm speaking about, that's where the numbers are coming out well.
Okay, got that. Let me quickly look at how the markets are shutting shop, and we'll come back to Mr. Basu Malik with a lot of our questions that have come in as well, viewers. 25,413 is where we are at as far as the Nifty is concerned, about a 70 points higher. We are also closing in with the metals definitely shining brightest in trade, 3.2% higher, followed by banks, private banks, infra stocks, financial services, even oil and gas and real estate stocks that have pulled up. Broader markets also turning positive, but what we have seen as a declining factor today, it's the consumption space, FMCG that's down. Pharma, IT, and even auto stocks have moved to the slow lane towards the end of the session today. On the Nifty, the top stocks are Tata Steel, 4.5% higher. You have L&T, Tata Motors, Axis Bank, and even Eternal, the parent company of Zomato, that's up and about. Whereas when we look at some of the declining stocks, you'll find names like Asian Paints, Indigo, SBI Life, and even Maruti Suzuki as some stocks that have declined in trade anywhere between 2 to 3.5% odd, and that's how the markets have shut shop. But let's quickly shift to some of your questions that are coming in. Mr. Basu Malik, the first question coming your way is from Parth from Lucknow. He wants to know from you which sectors are expected to perform well ahead and after the union budget.
Like I said, expecting infrastructure, shipping, ports, dredging, uh, roadways, railways, to do well. And obviously their ancillaries, so steel, cement, etc.
Right. Sonal from Delhi also wants to know from you, Mr. Basu Malik, is there any still an opportunity to invest in stocks that are poised to benefit from the gold and silver rally? Well, case in point, of course, for gold will be either the gems and jewelry stocks or maybe the gold financier companies like Muthoot or Manappuram Finance. For silver, the proxy play has largely been Hindustan Zinc and, of course, some of the other EV semiconductor plays probably.
I would be very, very skeptical of investing in gold, silver at these levels. I think we are just seeing a parabolic move, and the history with parabolic moves is that they don't sustain. So I will not be surprised if we see a correction coming in. So right now, if you have a short-term view, I know gold and silver is going up every day, and it's
Yeah,
creating a lot of FOMO.
yeah.
But if if you're thinking of buying now, you've missed the bus, and
Okay.
there's no point in chasing it right now.
No point in chasing gold and silver right now. You've missed the bus if you're looking at entering afresh into gold and silver. Yes, of course, we have seen how the unstoppable rally has created a lot of FOMO among investors. I think silver prices are up, what, about 60 to 70% nearly in this just entire 1 month of January itself. It's crossed over the 4 lakh mark. Every day, we probably see about 20 to 25,000 rupees of an uptick on silver prices. That's the kind of jump that we are seeing in silver. Even for gold prices, we have seen over the last 1 year about 80 to 85% surge already coming in. So nearly doubling of the gold prices also, whereas silver is already up by 200 and more percentage points when we look at the jump that we've seen in silver. It's definitely created that FOMO. Do you think, if not a case for a fresh buy for all those who were the lucky investors over the last 1.5 years who really built up their portfolios with gold and silver, looking at the geopolitical uncertainties, is this the right time to book out maximum profits? Do you see some correction happening now?
I would suggest booking out at least partially.
Okay.
For now, because it's just one way ride, and if you book out partially, at least you will have some gains, and then you can wait. I mean, I'm not suggesting that gold and silver rally is completely over, but it has to consolidate. It has to take a breather. It just cannot keep going up like this. It's sort of something that has not happened before, and some things that have not happened before, it's unlikely that it will keep going on happening.
Yeah. We'll take one more question and squeeze in that. Pawan from Mumbai asks you, can we expect opportunities in the IT sector for investment after the earnings season?
I think so. I mean, I think that IT sector is actually one where we should be looking at least for the short to medium term, because we're seeing sort of dollar getting close to 92, 92.5. Some of the worst news in terms of not getting deals, etc., is over. So companies are announcing better deals coming, deal flow. So some of the IT companies can actually come out with better results.
Absolutely. Well, thanks a lot then, Mr. Basu Malik, for being with us on this very special edition and for sharing your insights on markets, on commodities, and for solving a lot of those queries asked by our viewers as well. Viewers, in case you too have any questions about your investments in mutual funds, your SIPs or stocks or gold related questions, then please do send them to us on the number that's flashing on your screens. But don't also forget to tune in tomorrow morning at 9 a.m. for all the market opening action with Abha Bakaya.